Something's happening in the silver market right now that most people aren't paying attention to. And I'm not talking about the price movements you see on the charts. I'm talking about something far more fundamental. Something that's been building quietly for 5 consecutive years. And when this finally breaks into mainstream consciousness, the shock is going to be unlike anything we've seen in the precious metals space. Let me paint you a picture of what's actually happening beneath the surface. Right now, silver just crossed above $64 per ounce. That's a record high. But here's what makes this different from every other rally we've seen. This isn't being driven by speculation. This isn't retail investors piling in because they saw a YouTube video. This is being driven by something far more powerful and far more permanent. A structural supply deficit that's now in its 5th consecutive year. Think about what that means for a moment. 5 years. 5 years where global demand has exceeded global supply. 5 years where the world has been consuming more silver than it produces. And unlike previous deficits that lasted a year or maybe 2 before correcting, this one keeps getting worse. The Silver Institute just released their latest data, and the numbers are staggering. We're not talking about a small gap here. We're talking about a deficit that's measured in hundreds of millions of ounces. And every single year, that deficit has to be filled from somewhere, from existing stockpiles, from above-ground inventories, from recycling. But here's the problem. Those sources aren't infinite. Now you might be thinking, okay, supply deficit, I get it. But silver's had supply issues before. What makes this time different? And that's exactly the right question to ask. Because what makes this different isn't just the deficit itself. It's what's driving the demand side of the equation. And more importantly, it's the fact that this demand is only going to accelerate. Let me break down where this demand is actually coming from. Because this is where the story gets really interesting. Solar panels, electric vehicles, 5G infrastructure. These aren't speculative technologies anymore. These aren't maybe someday applications. These are massive established industries that are growing exponentially, and every single one of them requires silver. Not wants silver, requires it. There is no substitute that works as well. Take solar panels. Silver is the most conductive metal on Earth. When you're trying to capture sunlight and convert it into electricity as efficiently as possible, you need the best conductor you can get, and that's silver. Every solar panel uses it, and the solar industry isn't slowing down, it's accelerating. The Silver Institute is forecasting that automotive silver demand alone is going to grow at a compound annual rate of 3.4% between now and the end of the decade. That might not sound dramatic until you realize we're talking about an industry that's already consuming massive quantities. A 3.4% annual growth rate on a large base number means we're adding millions of ounces of new demand every single year just from cars. And it's not just cars. It's the entire electrical vehicle ecosystem, the charging infrastructure, the grid upgrades needed to support it, the battery management systems. All of it requires silver. Then you've got 5G. Every 5G base station uses significantly more silver than the 4G stations they're replacing. And we're not talking about replacing a few thousand stations. We're talking about a complete global infrastructure build-out, hundreds of thousands of new stations, maybe millions when you factor in the densification required for 5G to work properly. But here's where it gets even more interesting. These industrial applications, they're not price-sensitive the way investment demand is. When you're building a solar panel or an electric vehicle, the amount of silver you need is a tiny fraction of the total cost. If silver doubles in price, it barely moves the needle on the final product cost, which means this demand is going to continue regardless of where the price goes. Think about what that means for the market dynamics. In a normal commodity, when prices rise, demand falls. People find substitutes. They use less. They wait for prices to come back down. But with silver's industrial applications, that mechanism is broken. The demand is going to be there whether silver is at $60 or $80 or $100. And on the supply side, that's where things get really constrained. Silver isn't typically mined as a primary product. About 70% of silver production comes as a byproduct of mining other metals: copper, lead, zinc, gold, which means silver supply is largely dependent on the economics of those other metals. You can't just decide to mine more silver because the price is high. You're constrained by the production decisions being made for completely different commodities. And even when you do have primary silver mines, bringing new supply online takes years. You can't just flip a switch. You need to discover the deposit, which takes years. Then you need to permit it, which takes years. Then you need to build the mine, which takes years. We're talking about a 7 to 10-year timeline from discovery to production, in many cases. So you've got demand that's accelerating and relatively price inelastic, and you've got supply that's constrained and slow to respond. That's not a recipe for a normal market correction. That's a recipe for a price shock. Now let me show you what the smart money is doing while everyone else is still trying to figure out if this rally is real. Central banks have been accumulating precious metals at record rates. And while most of the attention has been on gold, silver is part of that story too. Because central banks understand something that most retail investors don't. They understand that we're in the middle of a fundamental shift in the global monetary system. The dollar's dominance is being challenged in ways it hasn't been in decades. The BRICS nations are actively working on alternative payment systems. Trade is increasingly being settled in currencies other than dollars. And when you're a central bank watching this unfold, you start thinking about what assets are going to hold value in a multipolar monetary world. Precious metals start looking pretty attractive in that scenario, especially silver, which has both monetary properties and industrial utility. It's not just a store of value. It's a critical industrial commodity that the modern economy can't function without. And here's something most people don't realize. The amount of silver held in investment form, in coins and bars and ETFs, is actually quite small relative to the size of the market. If even a small percentage of global investment capital decided to allocate to physical silver, the available supply would disappear almost immediately. We saw a preview of this a few years back when retail investors got excited about silver. Remember that? The premiums on physical silver went through the roof. Dealers couldn't keep it in stock. And that was just retail investors. Imagine what happens if institutional money starts flowing in. Quick aside here, because this is relevant if you're thinking about your own financial security. If you're sitting on a significant retirement account, 6 figures or more, you might want to understand how precious metals can fit into that picture. I put together a resource on how gold IRAs actually work, how you can get physical metals into a retirement account without triggering tax penalties. It's in the description if that's something you want to explore. Worth understanding your options in this kind of environment. But back to what's happening in the market right now. The technical picture is confirming what the fundamentals are telling us. Silver just broke through major resistance levels that had held for years. And when you break through resistance that significant, especially on this kind of volume, it tends to lead to sustained moves higher. The chart is telling us that something fundamental has changed in how the market views silver. And the options market is telling us the same thing. Call option volume has been surging. Open interest in out-of-the-money calls has been building. The market is positioning for significantly higher prices. And these aren't just retail speculators. This is sophisticated money-making calculated bets on where silver is headed. Now, let's talk about what happens next. Because understanding the setup is one thing. Understanding the implications is another. If silver continues on this trajectory, and the fundamentals suggest it will, we're not talking about a move to $70 or $80. We're talking about a potential move to triple digits, $100 per ounce or higher. And before you dismiss that as impossible, let me remind you of something. In inflation-adjusted terms, silver hit the equivalent of over $150 per ounce back in the early 80s. That's the real all-time high when you account for inflation. So a move to $100 wouldn't even be a new record in real terms. It would just be silver catching up to where it's been before. But here's what makes this setup even more compelling. Back in the 80s, that price spike was driven almost entirely by investment demand. The Hunt brothers trying to corner the market. Inflation fears, monetary instability. But the industrial demand wasn't there like it is today. Today, you've got both. You've got the investment demand starting to build as people wake up to the monetary implications of what's happening globally. And you've got this massive, growing, price-inelastic industrial demand that's only going to accelerate. That's a completely different setup than we've ever seen before in the silver market. And there's another factor that most people aren't considering. The paper silver market versus the physical silver market. There's a massive amount of silver that trades on paper, in futures contracts and derivatives, that has no connection to physical metal. And as long as everyone's happy trading paper, that system works fine. But what happens when people start demanding physical delivery? What happens when industrial users who've been comfortable with paper contracts start getting nervous about supply and want to secure physical metal? What happens when investors decide they don't want exposure to silver, they want actual silver? That's when the paper market breaks. That's when you find out how much silver actually exists versus how much silver people think exists. And if history is any guide, there's a lot less physical silver available than the paper market suggests. We've seen this movie before in other commodities. We saw it in palladium a few years back. The paper market said there was plenty of supply. Then industrial users started demanding physical delivery, and suddenly there wasn't enough to go around. Prices went parabolic. Silver has all the ingredients for that same kind of scenario. A tight physical market, a large paper market built on leverage, growing industrial demand that needs physical metal, and increasing investment demand from people who want the real thing, not a paper promise. The exchange inventories are already showing stress. COMEX silver inventories have been declining. The London vaults have seen significant drawdowns. The metal is moving from west to east, from investment holdings into industrial consumption, and once it goes into industrial use, it's gone. It's not coming back. It gets used up in products that get consumed or discarded. This is completely different from gold, where almost all the gold ever mined still exists in some form. Silver gets consumed, it disappears, and we're consuming it faster than we're producing it. Now, let me connect this to the bigger picture of what's happening in the global economy, because silver doesn't exist in a vacuum. We're in an environment where governments around the world have printed unprecedented amounts of money, where debt levels are at historic highs, where the traditional tools of monetary policy are becoming less effective, where trust in fiat currencies is being questioned in ways it hasn't been in generations. In that environment, hard assets start looking very attractive. Assets that can't be printed. Assets that have intrinsic value. Assets that have thousands of years of history as stores of value. Gold gets most of the attention in that conversation, but silver has all the same monetary properties as gold, plus it has this massive industrial demand component that gold doesn't have. It's both a monetary metal and an industrial metal, and that dual nature makes it uniquely positioned for what's coming. Think about the investment implications of that for a moment. If you believe we're in for continued monetary instability, silver gives you that hedge. If you believe the green energy transition is real and accelerating, silver gives you that exposure. If you believe we're heading into a period of deglobalization and supply chain restructuring, silver gives you that play. It's not often you find an asset that checks all those boxes simultaneously. And here's something else to consider. The gold to silver ratio. Historically, silver has traded at a certain ratio to gold. Sometimes that ratio gets stretched in one direction or another, but it tends to revert to a mean over time. Right now, even with silver at record highs, that ratio is still elevated compared to historical averages. If that ratio normalizes, and history suggests it will, silver has significant room to run even if gold just stays where it is. And if gold continues higher, which many analysts expect, then silver could really explode. We're talking about a scenario where silver could potentially double or triple from current levels just based on the fundamentals we can see right now. And that's before any kind of supply shock or investment mania kicks in. Now, I want to be clear about something. I'm not saying silver goes straight up from here with no pullbacks. Markets don't work that way. There will be volatility. There will be corrections. There will be moments where it feels like the rally is over, but the underlying fundamentals aren't going away. The supply deficit isn't going away. The industrial demand isn't going away. The monetary instability isn't going away. Those are structural factors that are going to drive this market for years, not months. And that's what makes this opportunity different from a typical commodity trade. This isn't about trying to time a short-term move. This is about positioning for a multi-year trend that's being driven by forces that are bigger than any individual market participant. The solar industry isn't going to suddenly stop needing silver. The electric vehicle revolution isn't going to reverse course. The 5G build-out isn't going to be canceled. These are massive multi-trillion-dollar transformations of the global economy that are going to play out over decades, and every step of that transformation requires silver. Let me give you a specific example of what this looks like on the ground. A major solar panel manufacturer needs a certain amount of silver for every panel they produce. That's not negotiable. That's determined by physics and engineering. As they scale up production to meet growing demand for solar, their silver consumption scales proportionally. Now multiply that by every solar manufacturer in the world. Then add in all the other industrial applications. Then add in investment demand. Then add in the fact that supply can't respond quickly. You start to see why some analysts are talking about silver potentially hitting $100 or more. It's not hype, it's math. And here's the thing that really keeps me up at night. What happens when this story goes mainstream? What happens when CNBC is running segments about the silver shortage? What happens when your neighbor starts asking you about silver? What happens when the financial advisors who've ignored precious metals for years suddenly start recommending them? That's when you get the real move. That's when you get the parabolic phase. Because right now, even with silver at record highs, most people still aren't paying attention. Most portfolios have zero exposure to silver. Most investors couldn't tell you the current price within $20. This is still early. The fundamentals are in place. The technical setup is confirming. The smart money is positioning. But the crowd hasn't arrived yet. And when the crowd does arrive, when silver becomes the hot topic at dinner parties and on financial television, that's when you see the kind of moves that create generational wealth for people who positioned early. We saw it in the 70s. We saw it in the early 2000s. We saw glimpses of it a few years back. And we're setting up to see it again. Except this time, the fundamental drivers are stronger than they've ever been. The industrial demand is real and growing. The supply constraints are real and worsening. The monetary backdrop is real and deteriorating. All the pieces are in place. Now, I want to address something that skeptics always bring up. They say, but what if they find a substitute for silver? What if technology changes and we don't need silver anymore? And that's a fair question. But here's the reality. Silver is the most conductive metal on Earth. It's the most reflective metal. It has unique properties that make it irreplaceable in many applications. And we've been looking for substitutes for decades. If there was an easy substitute, we would have found it by now. Could technology eventually develop alternatives? Maybe. But that's a years or decades-long process. And in the meantime, we're building out massive infrastructure that requires silver. We're not going to tear down solar panels and 5G networks because someone might develop a substitute someday. The demand is here. It's real. It's growing. And it's not going away anytime soon. Another thing skeptics mention is recycling. They say, well, if prices go high enough, won't recycling increase and fill the supply gap? And yes, higher prices do incentivize more recycling. But here's the problem. Most silver that gets used industrially is used in such small quantities per product that it's not economical to recover. The silver in your phone or your laptop or your solar panel, it's there in tiny amounts. Recovering it costs more than the silver is worth in most cases. So while recycling does provide some supply, it's not nearly enough to close the deficit. The numbers make that clear. Even with recycling at current levels, we still have a massive supply deficit. And that deficit is growing, not shrinking. Let me bring this back to what it means for you, for anyone who's paying attention to what's happening in the markets right now. We're at a unique moment in time where you can see a major trend developing before it becomes obvious to everyone else. The data is there. The fundamentals are there. The technical setup is there. But the mainstream narrative hasn't caught up yet. That window doesn't stay open forever. At some point, this becomes common knowledge. At some point, everyone knows about the silver supply deficit and the industrial demand growth and the monetary implications. And at that point, the easy money has already been made. Right now, you're still early. You can still position before the crowd arrives. You can still get in at prices that, in hindsight, will look like incredible opportunities. But you have to understand what you're looking at. You have to see past the day-to-day noise and focus on the fundamental drivers that are going to play out over years. You have to be willing to hold through volatility because you understand the underlying story. This isn't a get-rich-quick trade. This is a get-positioned for a major trend opportunity. And those are the opportunities that actually create lasting wealth. The silver market is about to shock the world again, not because of speculation or manipulation or some short-term catalyst, but because the fundamental supply-demand dynamics have reached a breaking point. Because industrial demand is accelerating into a supply deficit that's already 5 years deep. Because the monetary system is being restructured in ways that favor hard assets. All the pieces are in place. The question is whether you're going to recognize what's happening before it becomes obvious to everyone else. Because by the time it's obvious, by the time silver is on the front page of every financial publication, the biggest gains will already be behind us. This is your moment to pay attention, to do your research, to understand what's really happening beneath the surface of these markets, because what's coming in silver is going to be historic. And the people who position now, who understand the fundamentals, and have the conviction to hold through the volatility, those are the people who are going to look back on this moment as a turning point. The shock is coming. The only question is whether you'll be ready for it.